Welcome back to Financial Spectrum. I'm Bill Kearney. We're going to be chatting about something that we really haven't touched on in quite some time in the program. The markets have kind of quieted down when it comes to the news or the perspective on precious metals. And a lot of that's because there was this significant bear market or correction, depending on how you want to measure it, in the price of gold. You know, we had gold rally up to nearly $1,900 an ounce a couple of years ago. And at the time, boy, the commercials on television for how to, and there still are some commercials about it, but the commercials talking about, that the only safe place is gold. And there was almost panic buying when it came to gold. We were basically in a gold bubble. And though we kind of proclaimed that and talked about that here in the program, still many of you out there, and our listeners and the people in the community, still talking at that time, wow, I don't want to miss the move to 3,000 or 4,000 on gold, which is what the gold bugs were trying to tell you it would do. And so there was an awful lot of optimism and almost complacency in the value of gold. Well, it's pulled back, and it's about 1220, 1225, somewhere in that range now. And there are some analysts out there that absolutely believe it's heading further south as the economy gains in confidence. As both investor and consumer confidence rises, we see an sort of an undermining of that concept of the need for an insurance policy against economic disaster. Now, maybe we're preparing ourselves a little too much by putting too much confidence in the strength of the domestic and global economy. But the point is, gold tends to be a little bit of a reflection of that as to whether or not people are confident or concerned. So joining me now is a precious metals aficionado. He's got degrees in finance and economics as well as engineering, and he created the silver-investor.com website, originating the Morgan Report, a monthly newsletter that covers economic news and overall financial health of the global economy, currency problems, and key reasons for investing in precious metals. Joining me now is David Morgan. Hi, David.
Hi, Bill. Thanks for having me.
Oh, been looking forward to the conversation. Thanks for joining us. And we don't get many people these days that are coming on and chatting with us about precious metals. Not that they don't exist, but for the most part, it hasn't been a place that has rewarded investors over the last couple of years. So the question is, what's going on with gold now? Did I characterize gold and precious metals in general correctly from as I gave an introduction to this, or would you take issue with that? Do you think we need to look at it differently?
Well, I think you did a great characterization, but I'd just like to add on a couple things.
Okay.
One is that historically, from this present bull market, we saw gold go from roughly the 252 level all the way up to 1900, as you stated. And for 11 years, gold was in a bull market. In the last 2 years, as you said, we've been in a bear market for gold and an overall secular bull market, in my strong opinion.
Okay.
The other thing I'd like to add on is Ibbotson and Associates. You can type that into Google. It's Ibbotson and Associates. And they did a modern portfolio analysis on what is the best portfolio breakdown for investors.
Yeah.
And almost anyone that's investing knows you should diversify. So I've never been one of those rah, you got to put everything in the gold and silver wait it out kind of an attitude. I've looked at it as an important part of a portfolio. But more important, what I say is one of the best research analysts out there, or firms out there, Ibbotson Associates, that states that for the best performance overall on a long-term investing basis, you should have a weighting in precious metals of about 15%. Now, when I wrote my chapter in the Investing Rules book, I recommended 10% at the time. And then before the first Gulf skirmish, I'll call it, I upped it to 20% if you're so inclined to really go, strongly into the precious metals.
Yep.
So the point being that all investors really should look at it from an investor perspective, and it is a hedge. I mean, gold is the most negatively correlated asset to the stock market, and that's gold, not gold stocks.
Yeah.
So there's a place in everyone's portfolio from the long term. I mean, it's been beat up pretty strong in the last 2 years, but if you look at it from a 12-year perspective and you weight that against the stock market or the commodities market or the bond market or anything else, gold actually in that time frame from a longer-term perspective is still pretty respectable.
Well, I got an awful lot of questions to ask you. Let's start out with just sort of how to characterize all this. Is it unfair to lump you into the category of a gold bug?
No, it's not, because I'm what used to be considered an honest money advocate. I believe that the financial system is living a lie. the idea that we can print our way out of a problem. I mean, if you could create wealth by the printing press, Zimbabwe would have been the richest nation on the planet if it wasn't.
Yeah. Yep.
So I have had, I'm overeducated, you might say. I've learned this stuff since I was like 18. And I'm out there looking for honesty in the financial system. My mission statement is to teach and empower people to understand the benefits of an honest financial system. That is it. It's not about gold and silver per se, although they're important because of what's going on now, but it's that. We need some honesty throughout our leadership, the financial markets, the political system, et cetera. I could rant, I'll stop.
Yeah. Now, when you talk about honesty, is that in any way related to the idea that a tiny minority of economists and politicians still cling to the idea that we need to return to a gold standard? Is that part of what you're referring to when you sort of talk about it in terms of honesty?
Somewhat. I mean, the idea is that gold is, it's a thing on a periodic table. It's an inert element. It's been used as money and voted by the people at large. For centuries, there's things that have been used other than gold, but gold's always won out as that's what the people vote for as money.
Yeah.
But still, under a gold standard, you can have dishonesty. So there's nothing magic that if you're on a gold standard, all of a sudden, but it's more of a policeman on the currency than anything else that we've tried so far.
Yeah.
So is gold an absolute solution? No. Honesty is really the solution. Gold helps in that process. And when you get to the level that we are now, where there's so much going on in the financial markets that people don't trust, and they are losing confidence, they move to something that they have confidence in, and that's the inert element, gold and silver, that have proven to be money, as I said, to people around the world for centuries. So that's the place we're at. Does it solve all problems? Of course not.
Actually, when you say people move to where they have confidence, over the last 10 to 30 years, depending on when you look at it and how, people tend to move toward politicians that promise, I can straighten all this out. You can just trust in us. And so they're not trusting in anything tangible. For the most part, there's this concept that is characterized as a fiat currency or free-floating currency, whatever. Let's look at it from another angle. The concern about printing money would be much, much more significant if the U.S. dollar were not the reserve currency. Now, everybody within our listening audience, for the most part, a few listeners that we know are coming to us from places in Europe where they're listening over streaming web audio. But the point is, most of the people here are their daily lives are dealing with the dollar, and the dollar is relatively stable because it's the reserve currency. What's the threat to that? Is it possible that we're going to see, as the dollar rises and China starts to voice once again another round of concern about whether the dollar is a reasonable reserve currency for world commodities? Is there a threat to that? Is that within our lifetime? Do you see that being dismantled?
First of all, I'll answer it backwards. Yes, I see it in our lifetime. I mean, in my lifetime, and I'm over 60. So I think it is not imminent, but I think it will be within the next 10 years and probably sooner than that. And the threat is confidence, again, because mathematically it's impossible to pay off the debt. So you have two options, really, and there's variance in those two options. One is you can actually admit that, I borrowed this much money and I can't pay it back.
Yeah.
That would be a default, and I'd call it a semi-default, because a lot of times you'll get 50 cents on the dollar or 25 cents on the dollar or whatever.
Yeah.
That would take the bond market to levels that would be much different than they are today. So that's one way, and that's very, very politically unacceptable. And the other way is to say, everything that I owe you, I'm going to pay you. You're going to get every Social Security payment I ever promised you, every retirement check I ever promised you. But what I'm not promising you is what the value of that's going to be. And that's a hyperinflationary, or I would rather say an inflationary depression. So you get your money, quote-unquote money, it's really currency, but its value is depreciating at like 10% a year compounded.
Yeah.
And that's the way that politicians have always chosen. In fact, Jim Paplava, Financial Sense NewsHour, did a study and found that under a fiat system, there's never been a true deflation. And in both cases, you have a inflationary depression or a deflationary depression. You get a depression, and a lot of things are similar. High unemployment, job rate goes down, participation, as we know, is low, uncertainty in the economy. And you get these patches of bubbles, where the real estate looks good for a while, or the stock market looks good for a while, or the gold looks good for a while, until things get sorted out and there's really some stability in the system again. Usually stability doesn't come until it's the retroactive thing, and politicians go, oh no, this is what happened, now we have to do something.
Interesting that the Fed has a target of roughly 2% to 2.5% as an inflation target. There are economists like Milton Friedman and others in years past that said we don't need inflation; it's not necessary. But the Fed targets that, I think, in part, just from my own perspective, because both the central bank and the federal government need inflation in order to continue to raise spending. Without inflation, the federal government's in deep trouble because with a deflationary environment, people on fixed incomes win under those conditions. But the government that needs ever-increasing levels of revenue to cover increasing levels of spending, they're in big trouble, and they've got to find a way to cut that back, and that's not politically tenable.
Well said, Bill. I really can't add anything onto it. I mean, once the deflationary spiral starts, it's very hard to come back up. I mean, Japan's been in that for basically 25 years.
Yeah.
And they've set obscene levels of inflationary targets, and it's not working.
Yeah.
So once you start the deflation, it's very difficult to bring it back up into an inflationary cycle. And the 2% I laugh at from the aspect that, food and energy aren't really in the equation. And of course, everyone eats and drives. So it's kind of ludicrous how they measure inflation these days. But nonetheless, I agree with what you stated.
David, talk to us about commodities in general. You're a precious metals expert. But for a lot of people, they see precious metals as just one part of a strategy to invest in the commodities world. How do commodities different? How are they different? Which ones are safer? And how does someone come up with a strategy for alternatives in that respect?
Oh, thanks. Great question. Back in 2000, I said that the cycle had changed. You've gone from financial assets or paper products into the commodity cycle. Commodities were basically at a bottom, and the paper assets, stocks and bonds, were basically at a top. And so I said we're going from things we want to things we need. Everything in the commodity sector pretty much, not counting the financials that are traded in the futures market. I'm talking about, soft cotton and cocoa, talking about the ag, soybean oil, wheat, et cetera. So all the commodities are things that you need. If you think about it, everything that we use as a human species is dependent on something that's grown or something that's mined. It's that simple.
Okay.
And so that's that base. So commodities are the most basic needed asset class that you can have. And that was a very true statement up until the last couple of years where we've had this vacuum and filling in the market. Again, I think the cycle usually goes 17 years. Started in 2000, that would imply 2017 or so. And, of course, we're getting this, counter-cyclical situation where stocks are going up and commodities are going down. But it's basically getting, as the economy deteriorates, the physical economy, I'm not talking about financial markets that's supposed to reflect the true economy, which in my view do not, but the physical economy is not getting stronger in North America. You could argue in China and Asia that it is increasing. So what you have is this push toward things that are needed, and primarily that's oil. It's energy. Nothing happens unless you have energy. The fastest way to determine whether a country is on the upswing or downswing is to look at what's called energy flux density. How much electricity or oil, how much power can I get per person, per capita in that country? If that's increasing, your standard of living is going up. If it's decreasing or flat, it's going to stay flat or go down.
Okay, so from that standpoint, we know that gold, there's a supply and demand dynamic based on jewelry and some industrial use. Silver has its own supply and demand dynamics, not only from jewelry, but it's a very critical component of solar panels. And there's other uses for silver and industrial use as well. The others, copper, iron, things like that. Some of the other non-precious metals it's primarily a manufacturing industrial use. How does gold? What makes gold so different in that regard? I mean, there are some uses for it, but for the most part, you're looking at just demand based on the idea that it's finite and that it's a safe haven.
Right. I'll just basically add on to what I was saying about the commodity cycle. I kind of lost my train of thought. Sorry.
That's okay.
The top tier of all the commodities really is gold. I mean, silver is a subset in a way because it's 50-50. It's half of a monetary asset and half an industrial asset.
Yeah.
Whereas gold is above ground supply, just keeps building all the time. So why is it so coveted? And it goes back to what I said earlier, is that mankind has determined that that's a store of value.
Okay.
That's a store of value that's so coveted, so wanted, and so wished upon that, wars are fought over it. So of all the commodities, there's only one that stands out, gold more than silver, that people will hold on to indefinitely for all kinds of reasons, but primarily wealth preservation. And it's the only commodity of all the ones I outlined that basically has such an advantage, not only as a store of value, because people believe it has a store of value, but it doesn't rot. It doesn't, you don't have a problem if you hold a bunch of wheat or soybean oil or whatever. You've got problems with almost all commodities that you hold long term, but not with gold. And the value per unit is so high, you could put a Mercedes-Benz worth of wealth into your two front pockets in your suit, and basically no one would be the wiser until you walked in and spent it. That's the value of gold.
David, when I started my career in financial services, people wanted to invest in gold. They had to go through either a major full-service broker that had relationships with gold vaults and distributors, or they had to go directly to somebody like that and find a way to store it, which is expensive. And then if they had to sell it, they had to be assayed and determine whether or not its purity was still high enough for its value. It's an awful lot easier now. They can just go and get shares of the ETF GLD or something similar, and with a high degree of liquidity and low cost. What way do you suggest people best invest in gold or silver?
Well, very old-fashioned. I still think that it's best if you should start with the real physical metal first that you hold. But that's, again, for a small portion of your asset. Again, I don't advocate you should have this, your entire net worth in gold. I think 10% is probably best for most people. But outside of that, then I'm free market. If you want to do the ETFs, you want to do gold mining stocks, you want to do some of these ETFs that are 2 or 3 times leveraged to the gold price, et cetera, go ahead. That's fine with me. But I think the safest thing is being outside of the system to a small degree, meaning that if there was an electronic problem or there was something that happened in the currency markets or this type of thing, if you had physical assets that's outside of that whole electronic counterparty risk syndrome, and I know it sounds old-fashioned, I know it sounds like a mystery novel from the 1900s, but nevertheless, it's true that when you own it and you can touch it, it is basically a safety valve that no other asset can provide you.
Well, if the need for that safety valve actually occurs and we have a significant economic downturn or, at worst, a meltdown of some kind, you better not only have gold, but you better have guns as well. And I think an awful lot of people that invest in physical gold think that way.
I think you're right. I mean, I'm not going to make excuses for that. I think that, if you look at the worst case, and having an engineering degree, I mean, when you integrate a function, you look from zero to infinity. Yeah. And that's the way I think. I look at the absolute worst case, the absolute best case, and the chances are that functions are going to be somewhere in between. But if you do look at the worst case, as you outlined, then you would want it. And if you did have it, and then it's how long does it go? I mean, we've already experienced the stock market shutdown after 9/11. We've had electronic glitches in the commodities markets that stopped trading for a while. And in those cases, having a little bit of physical isn't going to hurt you any, and chances are you're going to have to run out and actually use it. Chances are no. But nonetheless, in the scenario you outlined, that would be one that went on for, couple of weeks is probably about all it would take if you lost the financial wherewithal in the markets totally, which I, don't see happening, but I wouldn't rule it out.
Well, most people don't see it happening. It's pretty rare that somebody actually sees a meltdown, before it occurs. And then we're in the midst of it. The question is, how far down is it too late to sell? And having some kind of insurance against that, gold has worked that way long term. As you say, it's got a negative correlation with stocks. So those people have become a little bit complacent. Maybe now is the time. And the reality is any kind of an insurance policy is something basically you hope you don't have to put to work. You don't hope you don't need it. So that's, you don't buy insurance expecting you're going to need it next week. At least most people don't. But talk to us about your website, silver-investor.com. What would somebody get out of that? And, what's free and what comes with a subscription?
Sure. First of all, there's a weekly e-letter that we put out, which is every Saturday, and we recap the market and usually take a question from a reader, not necessarily a member of the paid part of the website. Also, there's a YouTube channel called Silver Guru, and there's a Twitter feed at Silver Guru 22. So anything I read a great deal, like anyone in this business, and I throw about the top 3 a day out there for people who really want to follow the financial markets, not just the gold market.
Okay.
And then on the membership site, there's 3 levels: beginner, advanced, and intermediate and advanced, and that's over on the right-hand side of the website. You pull down menu and get a full deal. Plus, it's a 30-day free trial. So if you're not sure, I couldn't explain it in an hour. You can just log in, check it out. If it's for you, great. 80% of the people stick. Most of the feedback is, wow, this is awesome. I had no idea you had so much information. So,
well, if an investor does have an interest in understanding better, not just plopping down 5% of their portfolio in GLD, but really understanding what they're getting involved in, yours is one of the best resources we know of. So we appreciate your time today, David. And David Morgan is the founder and the writer of the newsletter at silver-investor.com, and it's probably the best place to go and learn more information about what David does. Hey, David, thanks so much for joining us today. Congratulations on the newsletter, and we look forward to having you back.
Truly a pleasure. Thank you.